Turnaround Tuesday, everybody. Hello, Patrick Humes. Pulitzer, how are you? I've won the Nobel Peace Prize for humanitarianism for all the free work I did in my career to help other people. I have it sitting here on my desk. Very proud of it. Hi, Sarah. How are you? Jacques? Sandeep? Thank you, Sandeep. It's with the greatest of pride I'd like to announce how humble I've become. Okay, so Turnaround Tuesday. Let's get to it. I don't have a lot to say. I'm not like the rest of the team. They watch everything. That's their gig to do it. Yesterday I said I think we're in a topping mode in Guppy, but I would allow for another push up. To me, it looks like a stop hunt over this high, getting a pretty negative 4-hour candle. You know, it could have gone to 48. It didn't. Maybe it still will. I don't think it will. And then we have to start taking out the 50-day at 6.5. And actually, here's a number that you can pay attention to for maybe partial profits if you're in the trade. The 2-week off number, and I'm looking for it to be taken out in Guppy by Friday, is 46.38.9. So there's your 2-week off number in the Guppy. I would say high risk, you know, because you'd be fighting the trend. But I also think that there's potential for Turnaround Tuesday in the end. That's a weekly. So the off number is way down here in the end, 12.30. I'd only be looking for maybe 13.20. But Steve showed the wedge. We had one more touch up here on the wedge, and the RSI did not take out 70. So potential for the end that it's peaking here, I wouldn't be looking for much more than 13.20, 13.30. I'm sure Steve will cover NZD CAD. Hi, Craig. How are you? Okay, so let's see if Blake is here. I'm going to toss it over to Blake.
I'm here. How you doing, Dale?
Hey, Blake. How are you?
Good, good. Just kind of getting ready for the open. I got out of a lot of stuff this morning, and I'm just kind of, tomorrow Janet Yellen is
yapping.
Yeah, yapping, but it's kind of important. Her Humphrey Hawkins.
Going to Congress, right? It's what they used to call Humphrey Hawkins Day.
Yeah, that's correct. The Humphrey Hawkins meeting, or speech, or whatever it is going to be pretty important, because I think we've got to be listening for what she has to say about inflation, what she has to say about asset prices. Seeing if they're starting to get concerned about the elevated prices in equities. There's a few things that I think that we need to, we're going to have to cue in for towards tomorrow. And I don't know how much, I don't know how much movement we're going to get today before tomorrow. Tomorrow's a big day. You know what I mean? So whatever we're seeing right now, we may revert back, and so that's why I was thinking this morning, like for example, I've been long the US dollar Mexican peso. I still like the US dollar Mexican peso, and I still want to be long, and actually, matter of fact, if I can get long a little bit later today down here, I am going to. But I took it off this morning because I'm like, okay, well, we were trading at 18.05. I said I'm just going to take it off, and I'll buy it again cheaper if I can. But I kind of wanted to, take some positions off ahead of Janet Yellen, and then like I was also long the U.S. dollar Turkish lira. Let me get over there. U.S. dollar Turkish lira rallied right up towards resistance, and I was thinking to myself,
lost your voice. Like,
Get it?
lost your mic.
Hey, Dale.
Hi, Steve. Maybe you could
Good morning.
text.
Good morning. Good morning to all. I'm going to write to Blake now.
All right, yeah, text him.
Okay, I just did.
How
Okay,
you doing? How are you doing today, buddy?
I'm actually good, and I'm actually eager to show some stuff. I
Okay.
think we we have some setups that have come up, which is a good thing. It's always a good thing to get some new stuff, and one of them is actually something unexpected. It's you want me to take the screen because who knows with Blake
Yeah,
something.
yeah, you could do.
Okay, I'm going to start from something that you know that I kind of hate. But
Oh, the Aussie Kiwi?
Yeah, since you all guys and girls are forcing me to keep a constant eye on it because you really love it, I need to remind the conversation we had last week here. You remember
Can you guys
this
hear me?
Yeah,
now we
Blake,
can. Now we can.
welcome back, mate.
Hey, thanks. I'm sorry, Steve. I'll let you finish your thoughts, but there was something that said that it paused my desktop. It was some weird message that I've never seen from GoToWebinar, so I'm not too sure what happened. But anyway, finish your thought, and then I'll take back over.
Okay,
Yeah.
and it's a good idea if you give us your feedback. Blake, they keep poking me about the Aussie Kiwi, so we were like here. And they said that, listen, for me this thing is bearish unless there is only one thing that can happen, is if we get a reversal immediately from where we stand to actually, turn higher and retest this level, because then what we will have in hand is an inverse head and shoulders.
Looks
And that's
pretty good.
that's exactly what we see at the moment. And we're currently testing a very major level here, because not only it's like a major area that has provided support and resistance in the past. I already had it marked there, but now it also coincides with the neckline of this inverse head and shoulders. So I really think that a break above here should should take us to the next zone, which is at around 1075. So I think that we now have at hand a bullish setup for the pair. And we're getting very close of triggering it. I don't know if you were monitoring that, Blake.
Oh, I am. I mean, we're right there. I mean, I think what as you're pointing out here, we need a really solid break above that resistance zone.
Yes.
And
Definitely.
once that happens, that'll clear up a lot of things. The thing about the Kiwi is the Kiwi actually is breaking down today. It broke down. I mean, we broke through that 72.50, which to me it seems like it's been a long time coming to break below that. So I think that's been pretty positive development. Damn, this pound is really just getting destroyed here.
Yep, it is.
Wow. I got out of the pound New Zealand fortunately very early this morning. Before Broadbent was speaking, but man, this pound's just really got not a whole lot of life right at the moment.
It's still having a good day, the pound Kiwi. I mean, we rebounded again from this zone. Yes, of course, now we're paring back some of the gains.
Yeah.
But yeah, definitely. I mean, I think the pound is currently showing weakness, but I think, Blake, and most probably you're looking at the same zone as I am, and I'm going to give you the screen, by the way. We can't be overly bearish the pound as long as 128 this zone actually holds, because this can simply end up being a corrective move. Of course, the price action has been very, very choppy. There is no question about it, and obviously this is not a pair to just be sitting around on it. I mean, there are better opportunities at the moment, but I think that as long as we trade above 128, turning overly bearish might prove being a mistake. That's what I think.
Yeah, I agree with you. Here, I'll take over from here.
Yep.
Like I said, I'm not too sure what the hell happened there, but yeah, I mean, we're sitting here at the 38% retracement, and basically we just tagged stops below yesterday's low. That's all we've done thus far. We just took out the stops there. I wouldn't be wouldn't be bearish at the moment, but there may be better opportunities in other places at the moment. And like I said, tomorrow the most important thing is Yellen, and I think Yellen's going to give us a lot of shed a lot of light on what we should be doing. You know, you know, as far as stocks go, the bond market, you know, the bond market, I'm carefully watching the bond market here, Steve. As you know, we've been bearish coming out of this wedge, but the bond market is trying to form, at least it's consolidating down here, and you know, the
next could rally back to 126 and still be bad, and that might be the catalyst for a pullback in the end, 100 pips or so.
Yeah, the question is the following though, Blake, and you remember we had said the same pre the Fed decision, the previous Fed decision. The bar has been so low, at least having to do with price action with the dollar, that I fail to believe that anything that Yellen can say can really provide a big dovish boost. So you know, bringing the dollar like strongly lower. I think that, you know, the risks are tilted that what she might say might actually spare some dollar strength instead of the opposite. At least that's my personal point of view. I would be more worried being short the dollar, you know, pre her speech than the exact opposite. I don't know, what do you think of it?
Well, I actually, to be quite honest right now, I don't have a big view about the dollar, other than I know where the euro's at, and as long as the euro stays below 114.50, you know, there's no way for me that I'd be short the dollar. So I mean, it makes sense what you're saying, that you know we could get a dollar, you know, maybe about a buying following Yellen. I mean, because I think, you know, if she talks about inflation and about how, you know, they're going to do whatever they can to ward off any type of inflationary pressures, then you're right. I think the dollar's going to rally. I think it, you know, the bar is pretty low. But at the same time, I'd be kind of nervous being short the dollar. You know, I think you have to play the reaction tomorrow.
I'm absolutely with you there. It's important seeing, you know, the reaction and seeing, you know, if you want to fade it or go with it. But one of the things I'm thinking, and you know, we haven't discussed it the last few days, you were off, etc. And I'm just sharing openly now here with everybody that's listening in, is the following. The Fed, through Yellen, of course, in the last rate decision, they made quite clear that unless we get a serious reason not to do so, they've set a hiking path in motion, and they're not willing to reverse that, of course, unless something very important happens with the economy. What I'm thinking is that this kind of dedication to what they're trying to push through the markets creates a feedback loop with what they have to say afterwards. I mean, since they're currently on a hiking path, it would be completely controversial if Yellen came out with dovish comments. That's why I'm thinking that the chance of seeing Yellen coming out with dovish comments is extremely low. You get what I'm saying?
Yeah, no, I understand what you're saying. And yeah, I mean, the question, I guess the other question is, how long is this cycle going to go? You know, where does the tightening cycle end for the Fed? You know what I mean? You know, if we start to get, you know, catch wind of it, that, you know, maybe they're towards the end of their hiking cycle, you know, at the end of this year, that would be dollar bearish, I think.
Definitely. But,
you know,
I think we're not there yet. I mean, we're not there at the point that we see strong evidence of a slowing economy that can actually, get us worried that they might just pull the handbrake on the hiking cycle like immediately as we speak.
Right.
And guys, Blake, something we talked about last week when you weren't here is that Fed fund futures are implying less than 2 more hikes until the end of next year. So what's the risk? The risk for the market going to price 0 is much lower than the risk of market pricing in more than 2. Pricing another 1 or 2 hikes for the next year and a half is very easy. Just something to think about,
Oh, that's a good point, Stelios. That is a very, very, very good point. I guess, going back to, how to trade tomorrow, I think it's important that we all think about trading the reaction versus trying to trade the anticipation, because it's very tempting to say, oh, well, I look at the euro dollar and say, oh, okay, well, the euro dollar here, has manageable risk. I can get long, or excuse me, I can get short, and then I can add if it breaks below 113. But the flip side is, man, if we break above 114.50, the dollar is going to get destroyed. So for me, I'd rather play this, which I think is going to happen tomorrow. Here, let me grab my pen here. I'd rather play this, right, or this, which we should have a pretty good indication of which one of these two scenarios we're in as of tomorrow. But trying to gauge what you're going to do here is tough. It's tough to do. Now, which one? And I'm going to ask you guys this question. And Dale, I'd love to hear your input too. Which one do you think would have the bigger reaction? The move in the euro below 113 or the move in the euro above 114.50?
Well, the way the market's positioned, I would think the move lower for a shakeout, which I think longer term is going to be bullish, because the institutions will drive the market down so they could buy it and push it up so they could sell it. So I think a lot of people are going to get super bullish over 114, over that line, but there's tough sledding all the way from there to 117. So I guess I'm talking out of both sides of my mouth.
Steve, Stelios, what do you guys think?
I'm strongly neutral with you. I'm interested in what... Go ahead.
Sorry, Dale, I didn't mean to interrupt, sorry.
It's okay.
My personal view is because this 114.50 level has been huge for 2 years now or something like that. I think a move above that would make a much bigger reaction than a move lower. That's my opinion. But again, who knows is the answer really. But that's, if you put a gun to my head, I would say that's the biggest one.
Steve?
If you asked me a few weeks back, I would definitely tell you a break higher. If you're asking me today, which you do, and seeing how many research from banks I've lately received that euro is going to go to 116 to 118 to 120, etc. I can't tell you with certainty, but I can tell you one thing for sure, that a break above 114, 114.15 is not going to be considered anymore like a big surprise. I mean, that boat has sailed.
So it'll go to maybe that 117 spike that we had last year in September.
This is how I would play it.
Okay. 118.
That's how I would play it. And I, first of all, Stelios, I agree with you. I think the move above these highs would be the bigger reaction. Because I think everybody's waiting to buy the euro cheaper. So I think the euro is is being bought down here at 111, 110, right?
Yeah. Yeah.
But I think this move right here would create the squeeze, and then you want to sell. You want to sell above the squeeze, like this point. That's what I would be looking at. Is I would be looking to sell this move.
You know, many
Right.
months ago, I saw an Elliott account. I'd love to ask Greg on it, that actually had this as some type of triangle with the potential of a move to 117, and then that was going to be it. Okay, then that was going to be the end of the move, and we're going to head sharply lower. I don't know, Steve, did you see a count like that? I saw it months ago.
Yeah, as an alternate count, I had seen it, yes.
Yeah, so it's like it's going to be a terminal thrust up there, and then we resume the downtrend. So good area for it to go to, and that would take out the stops over 117, I guess.
Yeah, right? I personally hope this happens. I would love to see the euro squeeze above 117. Then that gets the last remaining people long, because the market's pretty long the euro right now. Correct me if I'm wrong, positioning wise.
No,
I didn't see
you're absolutely right. You're absolutely right.
Yeah. So you get this.
Not only
it is very bullish. Yeah, and then you get everybody really bullish above 117, squeezes out the last bit of shorts, and then you turn around and short the hell out of it around 118. That is what, like, if I could imagine, like, the ultimate move, that's the way I view it. Now, just because I want it doesn't mean it's going to happen. And people that have listened to the Morning Edge webinar that I hosted for 12 years or whatever.
100 years, like
100-year webinar.
Did it feel like that?
It felt like it. Yeah, sure did. But I'll tell you that I always draw out what I think is going to happen, and I'm lucky if it happens 30% of the time that way. But when it happens the way that I imagine it's going to happen, I trade very aggressively, and I usually trade. Those are my most successful trades. Like if I, because if I can do this, and I can say, okay, well, I'm a buyer at 111, I'm a seller at 118. If we squeeze higher, and this actually plays out this way, and I get aggressively short around the 118 level with a real tight stop, that's usually going to be that trade pays me really well, because this is what my favorite scenario is, and I tend to be pretty aggressive during those. It doesn't mean it's going to happen that way. That's just again, it's just me. The 30% time that it does happen the way I envision it, like that, like my ultimate setup, those are the best ones. And
I'll ask Raul today, because I know he's a long-term euro. What levels, if he's salivating, chomping at the bit to start building euro positions, what level he thinks it could go to.
Okay, sounds good. And I got one last question. Whose damn cat is that?
Mine. One of the two.
Oh, all right. Gosh, those cats, I tell you. Yeah. Anyway, no, I actually, it's funny, this last week I spent a lot of time with some cats, and I missed them because, mine passed a year ago, the one we had for 17 years, and I miss her. Anyway, so, as far as the, everything else, I really, one other thing that I want to, today's Tuesday, right? Today is Tuesday. Okay. Yeah. So Tuesday is also known as Turnaround Tuesday. Now, I was looking at some of these yen pairs. Let's take today's candle and dismiss it. So let me grab the pen and let me
Did it take out the high, the May high earlier today?
Yep, just a moment ago we did. Okay, this is a shooting star, whether it's a green or red candle. You usually look for the wick, right, to be 2 times the size of the body, right? And we're not. I mean, it's close, but but there's a lot of close in technical analysis. It's not perfect. So you have a body. If the wick is 2 times the length of the body, then it's a shooting star, whether it's green or red, right? So the dollar yen is coming up against some key resistance. Is so close to a shooting star right here yesterday. All right, so I'm like, okay, well, what I'd like to see, and we popped higher, just took out those highs, right? What I'd like to see is I'd like to see us reverse and close below yesterday's lows. Now, that's a lot to ask with the dollar yen. I mean,
that will be a key reversal.
Yeah, that would be a key reversal if that happens. Then it's early, but it is turnaround Tuesday, so that's why I'm pointing this out before the stock market opens. But it's not just that one. It's let me go over here to the euro yen. Same thing, okay? Euro yen, that is a shooting star, right? That's a shooting star, but we haven't had confirmation yet. Now, if we close below yesterday's lows, that would be a confirmation of a reversal. Pound yen, shooting star. We already got another shooting star developed. If we close below yesterday's lows, same thing. You know, Aussie yen, we just popped through those highs. But I mean, we'd have a lot of work to do to actually reverse all this stuff. But like I said, it is Tuesday. It is July, which seasonally it's not a good time for the equity markets anyway. And it's ahead of Janet Yellen's testimony tomorrow. So, you know, could we indeed get a reversal of some of the stuff, especially with, you know, Janet Yellen, you know, talking tomorrow, and you know, here's the New Zealand yen already showing some reversal, Canadian yen right up against big resistance here too. Could we get some, you know, reversals in these pairs? Maybe. What I'm going to be watching is I'm going to be watching the bond market, as I was showing you guys earlier. The bond market is trying to base. It's not around any key fib, in my opinion. It really isn't. It's in between some fibs here, so you can see that, you know, we're just kind of in between. I just think that if we end up bouncing in the bond market, some of these yen pairs could come down, and if the stock market comes down as a result, we might get some reversals in some of these yen pairs that have been bid a lot. I mean, bid quite aggressively recently. So, and like I said, tomorrow is Janet Yellen's testimony. The market might get a little nervous and say, you know what, I want to sell my equities here. So who knows? You know, I think it's something we need to keep an eye on.
That bond chart, we could be looking, even though it wouldn't be perfect, at a possible neckline, and we get a left shoulder with symmetry, a right shoulder and symmetry to the left. You know, you could have a pretty good rally.
Yeah, so, yeah. It's possible. I mean, hell, you know, I just, you know, I'm going to be really carefully watching the bond market the next couple of days to see what to do. I think that'll give us a lot of clues. Anyway, I'm looking forward to hearing your interview today. I mean, you guys, if you're listening in right now, you have to stick around today. Your guest, Raul, is he's been on CNBC a lot. He's a very well-known ex-hedge fund manager. He has Real Vision TV, interviews some really high-powered people himself. He's going to be a really insightful. It's going to be a very insightful interview today, which I'm looking forward to hearing, and I'm sure the rest of you guys are. So I'm gonna pass it over to Steve as we head into the open. So thank you guys for being here today. Steve, I just passed you the screen. Stelios, Dale, Steve, thank you guys. Yep.
By the way, before you leave, I was showing it last week as well. Have you seen this huge break in Euro Swissy?
No, somebody said it this morning. Huge breakout.
No, I'm constantly showing it. I was showing it when we were moving higher and retested this, then the rejection, and then this break. And that's the reason I was telling yesterday everybody here on the webinar and last week that listen, you need to take that very seriously into account, because if you want to be long the dollar or short the dollar, and you have to make a selection of if it's going to be, you know, against the euro or against the Swissy, now that we actually get some movement, that makes it very clear that if you want to be short the dollar, you have to do it against the euro. But on the other hand, if you want to be long the dollar, you have to do it against the Swissy.
Great points. Really great points. That's a really great point. And you know, the dollar Swiss, in my opinion, has always been the trade to pick off on the long side. The only thing is you got
have a look at this, Blake. It's already actually making an attempt to break. That's what I had drawn yesterday. So we had this, and we're currently testing like a very important level here. I think that a confirmation above this, you know, unless we get something from Yellen tomorrow that you know, completely reverses that. If we didn't have Yellen ahead, I would definitely pull the trigger for a move towards the 98.70 zone. But ahead of Yellen, you know, it's
yeah.
no go.
Right,
Yeah.
right. That makes sense. Well, I think that if anybody's into being long the dollar Swiss is the one to keep an eye on, for sure.
Indeed.
All right, guys. Thank you very much.
Mate. Have a nice trading day.
You too.
Talk
Bye,
to you
guys.
later. Bye-bye. Okay, we had another look at the USD Swiss and the Euro Swiss, and we already had a look at the Aussie Kiwi. I don't have anything more to add to the Aussie Kiwi. I mean, it's very clear where we stand at the moment. This is an inflection point. If we get rejected again, the inverted head and shoulders pattern obviously gets invalidated. On the other hand, if we actually trigger above it, then definitely you can look for at least one more leg higher. So you know exactly where your risk is here. You know exactly what you're looking for, and it's as simple as that. What I wanted us to have a look at, though, which we haven't done lately, although I keep monitoring this index, is the US dollar index. And when I say the US dollar index, I'm not talking about the DXY. And the reason I'm also paying attention to this one is because oppositely from the DXY, this was a much more recent index created by FXEM that has a basket of currencies as the DXY, but it's a lot more balanced. So the euro is not like 50-something% of it. It's more evenly balanced between like Aussie, pound, euro, yen, I think a couple of more currencies as well. So the DXY we've already seen, and we know exactly where we stand. It's looking bad, but have a look at the US dollar index. I mean, if we look at this index, we can more clearly see the potential of a bullish setup, because we have a perfect descending triangle. You want to call it a pennant if you're bullish. You want to call it a descending wedge. Yeah, call it as you wish. But what I can tell you as a fact is that, technically speaking, a break above here is definitely a very bullish event, because this is a wedge we've been building since actually December 2016. So this is a technical formation that has been in the making for 7 months, 8 months actually. You know, so that's one thing to keep in mind, having to do with having, let's say, an alternative bullish bias for the dollar. I honestly suggest for people that want to know what the dollar is doing to keep monitoring both indices. That's what I've been doing actually, and sometimes seeing divergences between the indices is also you know, a good indication of reversals, etc. I mean, I can take you in the past if you want, but you know, that's not today's issue. Today's issue is that we have this very interesting wedge, and you know, I'm going to keep monitoring it. Since we had a look at this, let's go back to the DXY, although nothing has changed, to briefly say here that we had the morning star formation, which we haven't invalidated yet, but other than that, there is nothing bullish with the price action. So at the very minimum, we need
like we're in the eye of the hurricane, huh, Steve?
Yeah, and you know, until we get a daily close above 96.50, you know, there is absolutely no technical argument for saying, okay, I think that this is a low. Yeah, I mean, you know, it's like trying to shoot blindly. I mean, yeah. Okay.
Well, I don't know. I was taught, and if you look at the ranges of, you know, the last 3 days, there's an expression: never sell a sleeping market. And to me, this is getting some pretty good rents.
Yeah, you're right. But you know, you never know. You never know. And technically speaking,
No,
I
it's
don't have
just
the confluence.
old
I don't
sage
have the
wisdom.
confluence.
Just
Yeah.
old sage wisdom.
No,
Nothing
I
wrong
totally
with
agree
it.
with you. But in this case, you know, the only thing that's supportive of somebody being long is the reward to risk ratio, but nothing else. I mean, this is not an obvious level to rebound. Was not an obvious level to form a bottom. This was not like a confluence of, you know, some fibs and some trend lines or some extensions or like some target of a previous pattern that would lead us there. So, you know, it's like we remain, as I keep writing, we remain bearish until we see something to make us think otherwise. You know, a market that has been moving lower since the very beginning of the year, you know, you can just go long just because it looks oversold or because it doesn't fit so well with, let's say, a fundamental bias that you might have in mind. That's all what I'm saying to our friends here. Now, having to do with the yen reversals that Blake very well mentioned, he's right. The vast majority of the pairs, we've seen them together as well, are very, very close, technically speaking, to an area, or are already in an area that would be extremely well fit to form a high.
Did you stay short the guppy?
Yes, I am. Yes, I am. It's
Okay,
the only
so
one I'm involved at the moment, and I'm a few pips out of the money. But honestly speaking, I'm not even thinking about it.
I thought maybe you might have had a stop at new highs or something like that.
No chance in a million. No chance in a million. I mean, I really believe that you know, I have no stop whatsoever with this one.
Oh, I see.
Because as I said yesterday as well, I even expect that the possibility of a new high and a false break above here, you know, it is a possibility.
And, you would sell more up there?
Exactly.
Oh.
I would sell more. You know why, Dale? And this is a very risky tactic which I don't suggest to anybody to do. If I build, let's say, a cost average around here, that I mark this line here, I have zero worries that I'm not going to find myself in the money again. Personally, okay, this sounds stupid, but I see a pattern that's complete or almost complete, might be missing one leg higher. I've used very low leverage to begin with, as I always do. I will gladly add to it, and I would gladly wait for it to go lower. I'm absolutely
so you do this once in a while when you have a lot of conviction.
Exactly like that. It's not something that you should trade, that you should use as a trading practice. It's something that when you have conviction, on occasion I'm going to do. And to reiterate, I feel so comfortable that I have no stop loss, and I don't even think about it. I actually just opened my platform. My entry is at 146.628.
Yeah, you know that in the Market Wizards book, I think Jack wrote that all of these guys knew when it was okay to break the rules, and they ended up being some of their biggest trades.
No, I can believe that. On occasion, you just throw the rule book out just simply because you have a high conviction on something, and that's okay, as long as you know that you can afford it. You know, I've had some good months. You know, I'm expecting some losses to be greater than you know, you would anticipate on occasion, and that's okay. I'm totally fine with that. I'm also trading with the confidence of what I told you, that I've had some good months, and you know, I tend to actually consider part of my profit future losses. You know what I mean?
Okay.
As a mentality. So for example, you know, if I have X profit, in my mind I will segregate like half of it might be, you know, my next month's losses, you know what I mean? Something like that.
Yeah. Huh. Okay. Interesting, Steve.
Completely mental. It's not that I'm doing it.
Yeah, I know. Thanks for giving us a look inside your head.
Yeah.
All right, buddy. You could get off the couch now.
yeah, yeah. And the good thing is I'm not even paying you, right?
Yeah, I think
you're a very cheap psychologist.
I'm a trading shrink, man. Go ahead.
Yeah, having to do with USD yen, the same thing applies. We still keep testing the ascending wedge that we saw on the 4-hour chart, but we still have not penetrated above it. So, we can see it here actually. So the wedge is shrinking. We've been making several attempts to break above it, but we're not. Of course, it always takes us to higher prices. But in my opinion, this is going to probably end up, at least in the short term, to be unsustainable. I remain bullish USD yen by thesis for the time being, but on the other hand, I cannot ignore the fact that it's most probably very close to a pullback, so it can offer some better prices before it can move higher again. And this is quite a clean technical pattern as an ascending wedge. I mean, it had many contacts. It's a valid technical pattern. Of course, there is never a guarantee that something won't fail, but from my experience, this is a pattern that has a high probability of working out. So why not? I'm seeing also, the seeds of a yen reversal in general, at least in the short term. So why not? And this is the gappy that we were talking about on a 4-hour basis. And you remember, it was like, what was it? Like, because those are 4-hour charts yesterday or the day before, that I said when we were like here, I said that, listen, we can move lower from here, test this, and then we can see if we can move lower from there. But on the other hand, I said that, this pattern is probably not complete in my mind, so I wouldn't exclude another high. We got that high today. And then look what we got here. That was the previous candle, actually. We got like a bearish engulfing on the 4-hour chart. So this is a good start to begin with, this bearish engulfing. So we'll see. But, as I said, I'm pretty confident about it, and, I remain short. Now, if it works, it worked. That's it. There's nothing more I can do with that. Okay, there was a friend asking at the very, very beginning, actually, of the webinar about the Kiwi CAD, and please start throwing questions for whatever else you want. But let's begin by that, since he asked about it. And this is what I see here. Oh, actually, we had drawn on here. How many days ago was it? 1, 2, 3, 4, from what I see. Okay, 4 days ago, obviously, we revisited it. And what I said back then is the following, that we have two scenarios, either rebounding from there because we had that candle and testing this zone and then failing and moving lower, or moving lower straight from that zone, testing this broken triangles resistance, which might act as a support and give us some kind of rebound before moving lower. So obviously this is now out of the window. From the two scenarios, this scenario has played out, and now we're waiting to see if we're going to get this rebound of this zone. I think it's quite likely, and I think that if you're actually asking because you were, let's say, short the Kiwi CAD, this is a place that you might want to book some profits. It's not only the fact that we are actually testing this broken triangle, but if you also see here, this is a zone that has rejected us sometimes back here. So, at least a short-term pullback is a very likely scenario from where we stand at the moment. Okay, if not a reversal. So, be careful down here. There is obviously no reward to risk ratio to be short and to establish, fresh short positions down here. There's no question about it. So that's what I see with Kiwi CAD. USD CAD, okay, the loonie. Let's see what the loonie is doing to drive people mad. Okay, obviously nothing new here. We said yesterday as well that having reached this zone, it's a very likely scenario that we will end up at least testing the 128 zone. And to be honest, as long as we remain below 130, there is no reason to be, it's more or less like besides the fact that this is an impulsive move lower, there's no question about it, and most probably it's something like 1, 2, then an extended third wave, which is probably 1, 2, 3, 4, and the fifth somewhere, and then a bigger pullback and another low. So would I turn bullish from current levels? No, I wouldn't. Would I establish fresh short position from current levels? No, I wouldn't. So if you're not involved with it at the moment, my opinion, wait for a pullback to short. Don't try to catch a falling knife necessarily just because it's oversold, or because you might see, a single candle that points to higher prices. I think this is clearly a market that wants to move lower. Let it give you a decent rebound, then monitor for a signal that the unfinished downtrend is resuming, and just short on that. That's my point of view.
How about the gold, Steve? Some people are seeing a just like we have a rising wedge.
To begin with, we can see about it. But to begin with, if you want to know about the gold and silver, we posted this today, and it's also being posted on FX Empire. This is a fresh blog post that almost all of us wrote here. Greg didn't want to contribute this time because he has contradicting wave counts at the moment, so he needs to wait for a little bit more clarity, and I completely understand, because this market is not easy to predict at the moment. These markets are not easy to predict at the moment. But we wrote a very nice comprehensive blog post about silver and gold specifically. If you go to ForexAnalytix blog, you will, it's going to be on top. That we, Stelios has written a very nice macro piece. Then Blake and I have put the technicals in, and as always, Nick has contributed her harmonics viewpoint. So I honestly suggest that you read it. I think it's well written, and it's going to give you some insight. But yes, of course, we can go ahead and have a look at them together. Okay, I'll start with silver, and of course we'll visit both of them. There's no question about it. Okay, silver, and that applies to gold as well. Both of us gave us yesterday hammer candles, and quite long hammer candles. So, when you get when prices so much beaten as we've seen here, and you get like a reversal candle, like a long hammer, etc., it's something that you need to monitor closely, because it might indicate that we might get a bigger rebound. So having said that, that's not enough. I mean, a strong candle is not enough to turn us bullish, simply because silver is currently trading at 15-month lows, and that's something that you cannot easily bypass. Gold has broken an important triangle, but we're going to show that when I go to that point. So there are two things that can work for you if you want to be long. One of them is that COT positioning readings have been extreme, both for silver and gold, especially for silver. So the future markets have been unwinding long positions with a very fast pace, and equally important is the fact that we've seen extremely oversold. That's what I'm trying to reach to find out now in my, here it is, I found it. So the readings, the DSI, the Daily Sentiment Index readings in gold and silver are 13 and 14 respectively. I remind you that the minimum is 0 and the maximum is 100. The closer we are to 0, the more bearish the sentiment is. The higher we are close to 100, the more bullish the sentiment is. Usually any reading below 20 or above 80 is considered extreme. We're currently at 13 and 14. So both the sentiment and the positioning, which are usually contrarian indicators and quite reliable contrarian indicators, they don't give you a good timing signal, because something can be, can have an extreme sentiment for like a few weeks before it turns. Same with positioning. But keep in mind that this will eventually create some whipsaw move for sure, because people are going to be tilted to the other side. As we say, the boat is going to be loaded one-sided. So you need to be careful, because when we get a reaction, it might be strong. But currently speaking, unless I see a close above $16 in silver, and let's go to gold now, and unless we see in gold, okay, here is gold, and unless we see in gold at least a break above 1,230 to at least start registering again some higher highs instead of lower lows and breaking one important trend line after the other. We're currently trading below the 200 DMA, below the 50 DMA, below the triangles support. I mean, there's nothing to tell me bullish. There's no technical signal that will tell me you need to be bullish here gold or bullish here silver. So that's the outlook for both metals. And to be honest, I would rather avoid looking at 1 hour signals and 4 hour signals because, these markets are so much beaten down that in order for me to get something convincing, I would want it to be visible on a daily chart. Okay. Okay, my pleasure, Arif. So, what other markets do we have to look at? Let's see. Euro yen. Okay, yes, sure. Blake took us briefly through it, but let's have a look at it. Okay, my thesis remains here. We are very close to the completion. I mean, we had some confluences. We're currently trading a little bit above them. Anyhow, all kind of indications about equality of levels, this one and this one. So the two bullish legs had an equality at 129.75. Then we had an ideal target of the fifth wave here with the first wave at 130.25. Etc., etc., etc. I mean, those are indications of where you would look for a reversal. We've penetrated through them a little bit, but that doesn't change my thesis that I believe that we're very, very close to at least some short-term pullback, if not more. So what would I tell you? That it's bullish? Yes, of course. I mean, the structure is very bullish. We had an impulsive move higher, a correction lower, an impulsive move higher, but is there absolutely a reason for you to try to be long up here? I mean, to me, it looks like being like a suicidal attempt to try to be long up here. So there are two things you can do. Be neutral or be short. There's nothing else to do here. And, that is not going to change as a thesis, even if we move another 200 pips higher. I mean, anything can happen in the market, but still telling you that establishing fresh long positions where we stand at the moment would not have been a wrong decision, even if the price action proves that it would have been a trade that would make profit. Because, you always have to take, in mind what usually happens in a market under, specific criteria. Currently, we are trading at an RSI, daily RSI of 81.30. I see a clean structure that's complete, having to do with an Elliott wave pattern. So, everything points that sooner or later we're turning lower here.
Which would be your preferred short between Guppy? Well, obviously your book gives me that answer.
Yes.
You feel more comfortable being short Guppy, pound acting weaker, EG may still have another new high in it.
Exactly.
Okay.
Exactly. And by the way, people are asking about EuroCAD, which I'm still short and comfortably in the money, but I have to admit that it hasn't been doing anything much here. I mean, we saw this, we saw what looked like to be a very nice bear flag, but unfortunately, there hasn't been much continuation from here. I still like it, I still remain short. I might probably even trail my stop loss even further down into my profit. Ideally, as we've said, I would like to see two equal legs lower down here to 144.50, which would also fill in the gap. So technically speaking, and that's the 200 EMA as well. So technically speaking, a move down to 144.50 to test the 200 EMA, to fill in the gap, and to complete the equality of the two legs would be ideal. I mean, you know, it would be a perfect technical pattern. So let's hope we get that. I mean, I'm hoping. I'm short. I'm still short, so I'm still hoping I'm going to get that. Okay, what else do we have? Can you look at CAD yen? Sure, CAD yen. Give me a second. Okay, CAD yen. Let's see.
Ask and you shall receive.
Okay, CAD yen. This is exactly what we were looking several days ago, and so far it has worked out perfectly. We said a little retracement back, we got that. We said another move higher to test this high, we got that. And I said that I would see a more complete pattern if we got a pullback from here and another high. So CAD yen is one of the few pairs that, ideally speaking, I mean, so far I've gotten right 1, 2, and it looks like I might get the third of the fourth legs I predicted. And it's one of the few pairs that doesn't look really complete to me. Of course, that might completely go out of the window and we might see a rejection and a much deeper pullback. So, you know, doesn't mean that since I got like, you know, 2 of the moves and might get a third one, I will get the fourth one as well. So being where we are at the moment, I will tell you that being long up here is madness. We seem to be getting rejected on an intraday basis because this is a shooting star. Having to do with that, let me add a little bit more knowledge to what Blake said before about the candles. These candles, the 4 candles, which are the shooting star, the hanging man, the inverted hammer, and which one I forgot actually? Shooting star, inverted, those are the bullish ones, and the hammer, yes. All of them are called pin bars.
Steve Neeson, calling Steve Neeson.
Yeah. All of them are called pin bars. You have to interpret pin bars according to where you find them. So for example, if you show this candle, which has a white color, candles are called, you know, from the old ages, like the bullish ones are called white, the bearish ones are called black. This one can be interpreted as an inverted hammer, which is a bullish signal if you find it at the bottom of what you expect to be a rebound, but should be interpreted as a shooting star, albeit black in color, if you find it on the top of a trend. Okay, so in this case you have to interpret this as a shooting star, at least what we're seeing at the moment, and combining with that the fact that we got 2 more rejections. I mean, the higher wicks that you see up here yesterday and the day before that, it obviously shows us that at least we have some serious momentum loss here. So we're getting a serious momentum loss after a very strong run higher and after retesting the previous high. What that tells you is that at the very minimum, you should not be long up here. Okay. So I don't know if a small pullback and another leg higher for 1 more high, perhaps to penetrate through here and get everybody bullish before seeing a big reversal like this is going to happen, or if we're just going to get rejected and move lower. But my my idea about CAD yen is that is more or less the same that I said with euro yen. You're either short here or neutral. Establishing fresh long positions if you're not holding already positions that are comfortably in the money makes no sense. Yes, mate, we did speak about the USD CAD already. You can see that in the recording. A summation within 5 seconds is that there is no bullish signal yet. It remains bearish and probably on its way to 128, which might produce a bigger reaction, unless or until we see something that says, okay, now it's actually going to provide us with a bigger reversal. Okay, Kiwi yen, sure. Yen pairs are very popular today, and I see the reason, obviously. Okay. this is what we were seeing here. So, having said that, we cannot ignore what we're seeing today, and what we're seeing today is, if it gets confirmed at the close, this is an evening star formation. Okay, these three candles give us an evening star formation, and this is a bearish formation. So as long as we close, this third candle closes below the midpoint of this candle, of the first candle of the three, this is an evening star formation, and this is a bearish signal. So if that gets confirmed, then likely this is what we're getting. So Kiwi yen might have actually already turned. We need more confirmation, but it might have already turned.
Thank you, Steve. Okay. I have Raul in the house.
Okay, thanks for the good comments, everybody. Perfect. I will be watching the interview, of course. Enjoy the interview. Thank you very much, and I'll speak to all of you tomorrow. Bye-bye.
Everyone, thanks Steve for a great review on everything, and isn't it nice to come in and perhaps you have a position in a certain instrument and you could get Steve's views. What a great sounding board. Give me a Y if you appreciate it. I certainly do. Hello, Raul Paul. I'm going to make you a panelist because I don't think you have anything really to show on the screen. So I'm looking forward to hearing your voice and talking to you. It's been a while, buddy. So everyone, welcome my trading warrior brother, Raul Paul. Hi, Raul. How are you? You should be able to start the mic.
Hey, can you hear me?
And I'll show my screen. Yes, Raul, how are you?
I'm fantastic. How are you?
All right, so really great to talk to you today. We really have interesting markets to be paying attention to, so I just want to pull up my charts while I'm talking to you. So, Raul, it's been a while, probably a year or so. You know, we've had a few contacts through email. The first, I have to start with your rep as being a long-term Euro bear. Okay, I know that in this business, if you don't learn how to change your mind, you won't have any change left. But I'm just guessing here that you are probably chomping at the bit that we've had this rally in Euro from 103 up towards this 114 level, and interested in what your views are. Do you still consider this bear market rally a cyclical little bull move within a secular downtrend?
Yeah, so give you a bit of contextualization. I've been long the dollar against a number of currencies. I changed the currencies here and there, but I've been long the dollar since, let's say, 148.5 in the euro. So it has been, you know, I've been in that trade for a long time. So wow. I look at the market in a very different way than many other people. I'm looking at the big picture, long-term trend. I do trade around it, but that's the thing I keep in my mind is, where is the trend over the next 1, 2, or 3 years? For me, the trend in the dollar remains higher, the euro remains lower, and I don't see any evidence that this dollar bull market has come to an end. All I see so far is corrective patterns. Now, my guiding light in this, we've only ever had $2 bull markets in history before the dollar was obviously pegged to gold. But since it was a free-floating currency, essentially we've never had a weekly close down 10% from peak within a bull market. So that's my guiding principle.
Okay, so in the Dixie, the high was 104. So basically 92 to 94, if the dollar started closing under that, it would change your view on the dollar being in a bull market.
Exactly. Now, if I look now, we're currently on a weekly basis. We closed last week down 7% from the peak. So, you know, there's another 3% for me within this. So I'm now getting, as you said, super interested in, do I add to this trade here in trading positions? Because we're starting to get to a good entry point. So if I look at the DXY, I love to buy into what I call the heart of the V. So where the previous correction lay, it often corrects within that pattern. So whether that's somewhere between here and 94 or here and 93, depending which part of the correction we look for, is the
I actually have the weekly chart up. I don't know if you can see it, but your 200 week comes in around 92, which are previous lows. That would be about, I think euro was trading 117 the last time we were down to 92.
Yeah. Now I also use DMARC indicators, and DMARC for me, if I'm just looking at it, my DMARC indicators.
Do you want to show your screen? Do you want to share your screen?
My Bloomberg's on a different screen. So
okay. All right. So you count all those numbers up to 13, 9 and 13s and all of that.
Exactly. And basically, it suggests we're not ready yet, but we're getting closer. It's on the radar screen. So I'm now looking for signs of a reversal to come. But we've not seen that yet. So I'm just standing by the sidelines, waiting in this. But I'm getting more and more interested in stuff like the euro, as you said, because we're right at the resistance levels of where it should turn over. We're starting to see potential that the trend is weakening. So for me, I'm getting interested in these levels between here and 117, as you correctly say, are the levels where I really start to look at building a position, because I think the stop loss is very close then. The risk reward is a great trade, and you should be able to then stay in the trade for multiple months, 6 months or longer. And I love those.
I think you should be named Saint Raoul because of your patience. But I want to ask you, buddy, when you're looking at the euro and you have your view, and we've talked about technicals, and we know that's only half the picture, and I'm wondering what you think the fundamental catalyst would be for the euro to resume its downtrend. Is it going to be the interest rate differential between the U.S. and, even though the bunds have been breaking a little bit and rates have been rising a little bit, what do you think is going to be the fundamental catalyst for the next wave up in the U.S. dollar, should it happen?
Well, if I'm looking at the US dollar, ignore the euro for now, because everything's got a different reason. But if I look at the US dollar overall, I think, now this is not going to, many people aren't going to understand this, I think US economic weakness over time will actually lead to a stronger dollar, as it has in the past as capital comes back. Additionally, weakness within Europe. Now, European data has outperformed significantly over the last couple of months. European data lags US data by about 8 weeks, so we should see European data start weakening significantly going forwards. So in which case, we see the interest rate differential come in. That should help the trade. But if we actually see some US economic weakness, which I do think is on the slate for Q3 and Q4 of this year, then if we see that, then I think...
Is that because there's some risk off? Is that because there's a risk off event that would bring money home and into treasuries?
Correct. Okay. And if we understand the $10 trillion of dollar funding offshore, it means that if there is a risk off, people scramble to pay back dollars, it moves the dollar higher. So there's a number of structural reasons why the dollar could or should go higher over time. But we're kind of in no man's land right now. Economic data is kind of neither good nor terrible, and so the dollar tends to drift lower in that environment.
It's summer markets too, right, Raul? I mean, I know you don't have to go to the Hamptons because you live right on the ocean in Little Cayman, but maybe it's also the seasonal aspects of thinner volume and all the hedges being in the Hamptons until after Labor Day, and then the action begins. What do you think?
Yeah, absolutely right. So it tends to be not a great market to trade in, but as you know, often by the time everyone gets back in September or even a bit earlier, sometimes in August, volatility tends to start kicking off again and things get interesting. So, I have a tendency to wait for that too.
Okay, so I saw you on a segment on CNBC, I don't know, it was about a month ago when, the bonds were in a pretty strong counter trend, at least rally phase. And it extended a bit more. I'm wondering where your head's at now after this recent pullback. I'm thinking that if the bonds get hammered into the summer, you'd like to buy them because of what you think is going to happen in the fall. Where's your head at in that asset class?
Yeah, so, basically, if I look at bond yields, they're essentially, around 240 is the heart of the previous V from the previous correction. So that's my first area of interest. I have been long bonds for a while now. So you've got the 10-year note futures.
Right.
So, let's wait and see how they trade from here. The 10-year note futures look quite different to the yield chart right now.
Okay.
I don't know if have you got the yield chart there?
I don't have a yield chart up here. I have the bond.
Right. No, that's fine. That's fine.
Okay. Yeah, because they don't look like they're done with this sell-off to the downside.
No, but could it come back down to the 124 level and then form a base? Quite possible.
Okay.
Let's wait and see from here. I'm actually in the trade. I put the trade on a while ago, and I'm now just sitting and waiting for it to develop over time. Again, I'm slightly longer term, so I'm not looking for the short-term wiggles here. I'm looking at where the next move is, and I think the next move over time is through the all-time high.
Yeah, I became skeptical. I was interviewing Adam Button, and it was the day that the Chinese announced that they were big buyers of bonds, and I kind of learned in my career in commodities that anytime Chinese are announcing what they're doing, you should probably take the other side, because if they're buying them, if they're saying they're buying something, they're distributing, and vice versa. So that's going to be an interesting thing. I guess we have to talk about the record run in S&Ps and where we're at in the market. The upside has been amazing. It's lasted much longer than I thought it would. Where's your head at when your clients ask you about risk on the global bourses? And do you favor U.S. markets over emerging markets, or vice versa?
I mean, I know that Europe's been outperforming and everybody loves the European trade and everyone loves the emerging market trade. I still prefer the US over those markets over a longer period of time. I don't like any of the markets. I think the risk reward on the long side is just not great over time. So I'm out of, I'm not really long anything. I'm long India right now. That's about the only market I'm long of. I don't really like the S&P. I think it is likely to roll over and exhibit a topping pattern, but we need economic weakness to come into play that to happen, and we've not really seen a lot of that yet. So for the time being, I'm kind of very neutral on it.
Okay, what do you think when we get that potential risk off? Here's the weekly of the S&P. I know a lot of people are looking for one more push up, close to 2,500 by the end of the month or into August. Under 2,400, it's going to look a little bit vulnerable to me. Most people are going to buy every break on the way down, don't you think? You have perma bulls. It's rewarded them every dip they bought. They even have a cartoon out about a guy saying, just buy the effing dips, and and someone will say, well, I'm worried about this, I'm worried about that, and he keeps saying, well, dummy, just buy the dips. So do you think that it could be more than what most people are expecting? Most people would welcome 5 to 10% correction to get long equities. Is it possible that it turns into 20 or 30 with what you see coming down the road?
Yeah, listen, I'm expecting to see volatility first. So if you remember the top in 2000, I think that's more what I'm looking for. The top in 2000, we saw much more significant volatility first, as there was a big battle between the longs and the shorts. And then what happened, the price range got choppier and choppier and choppier, and eventually it broke. And I think that's the kind of battle that we will have for the time being.
Yeah, so we'll have a lot of distribution, range trading, and then it just takes out support, and then they go to war. The bulls make a stand again. Talking about volatility, I actually saw a tweet of yours. I'm not stalking you, okay? I coincidentally saw a tweet roll where people were talking about shorting the VIX and making a lot of money, and you made a comment that they have no idea what could happen when it rolls against them. And I'm looking at a VIX here that looks like a beach ball. Every time they push it underwater, it seems to recover. And action back over 15 would be very constructive. So do you think that this and record short positions in VIX futures, are you considering with your belief that volatility would pick up to find a way to take advantage of it in VIX derivatives or anything like that?
No, I mean, having learned my lesson, I don't like trading VIX derivatives.
Okay.
You know, yes, if you get it really lucky, you can get it. But, you know, the problem is it's mean reverting too quickly. So you really have to keep trying so many times before you can get it right. And I don't think in the end you can make a lot of money out of it.
That's a pearl.
What I do know is that the ISM, which I use as the business cycle, is perfectly inversely correlated to the VIX. So again, we will not see the VIX rise until the economic data gets worse. We will not see the S&P correct more meaningfully until we see the economic data start weakening. So it's all about the weakening economic data. If not, the status quo will maintain. But, you know, my signal is the economic data and the ISM survey. If we start to see that coming off towards 50, which I think it should do this at the back end of this year. Then
where's it at now, Ro?
It's about 57 right now, which is relatively strong. So it would have to go some to come off quickly. So it's going to take some months, which is another reason why I'm just not bearish right now.
Right.
I'm not bullish on the markets, but I can't put a position on in the medium term because I just don't see the opportunity. Short term, can it correct further? Yeah, sure. But I just don't see a bigger picture opportunity yet. You know, a big macro play.
Okay, here's your baby, buddy. Real Vision TV. I know, you know, that's how Blake feels about ForexAnalytix. It's his baby. So I want to make people aware of your website. I think this is, you had a statement that it's like, oh, here it is. It's like TED Talks for investors. The speakers that you get are, you know, unbelievable. And if you want to tell our community a little bit about it, looks like you have a 7-day free trial.
Yeah, so what we've done is we've created the antidote to CNBC, Bloomberg television, and all of the short-term sound bites. You know, like on this webinar.
Yeah, I've interviewed Mark Yusko. He was a great interview, and he gave you a nice endorsement there.
That's right, and the point being is we sit down with the smartest people in the world and figure out what they think about the world and also how they do things. So it's really important for everybody to learn from the world's greatest investors. So that's what we do. We've also got, I would urge people, you know, obviously they can go and have a look at the free trial and go and kick around the content. There's some incredible stuff on there with some really prescient calls from some of the most amazing people. Or if not, they just want to do something free, go and listen to our podcast. It's called Adventures in Finance, and it's on all of the usual podcast stuff. And you can listen.
Where do they find that? Do they find it on the website here, your podcast?
It's not on the website yet. It will be shortly. But you can go to Apple, or if you go to wherever you get your normal podcasts.
Okay.
You know, iTunes, anywhere else. Libsyn, you'll find Adventures in Finance, and that's a fantastic podcast. You know, I think it sets the whole benchmarking podcast, and it's free. You'll get all sorts of interesting stuff from that. So I definitely say people should go and listen to that.
You want to trade guest books?
Sure.
Okay. All right. I brought some decent people on, but I have names here I've never talked to. So I really want to congratulate you because I'm a big believer in intelligence gathering. And that's why I invite people like you in here to edify the community, and you're doing it with some of the best people in the world. So it's a great service, and I want to congratulate you. How many years has this been going now?
We're coming up for our 3rd anniversary.
Oh, congratulations.
We've got subscribers in over 100 countries now. It's extraordinary.
Fantastic, Raul. So I want to thank you for sharing your views with us today. Anything that you'd like to add, some words of wisdom for people going forward into the fall?
Yeah, the other one to look at that we didn't talk about was oil.
Okay, great. I could pull that up.
Yeah, I mean, I've been short oil since 57.
Okay.
Now, this is going to sound a little bit racy, but I think I think oil is probably likely to go to $20.
Okay. So what that means that we're going to be taking out last year's low of 25.
Correct. So
and that would also, you know, the market's been ignoring this oil weakness from 55, this recent peak up here. It certainly would not. I would think that the same type of problems that some of the high yield paper had and some of the, what are they, MLPs had back at the beginning of last year might reemerge if you're right about that.
That's right. Also tends to lead to a stronger dollar as well, because there is less dollars available for all the oil producing countries because they earn less dollars per barrel and they have dollar budgets. So it becomes very interesting. If you look at the monthly chart of crude, I don't know if you can pull that up.
Here it comes. You got it. There it is.
Okay, so basically, if you draw the trend line from the 2000 and whatever that is, 2001 low to the 2009 low.
All right, I'd have to compress it.
Yeah, so if you put all those lows up, basically,
there you go. Basically, we're right on it.
We broke it to the downside. We've retested it from the upside, and then we've rejected it.
There you go. Okay, so you're looking for a breakdown under this uptrend.
Yeah.
Okay. So then that's how we get to 25. And, let me ask you this, what's that going to do to what's happening in the Middle East? Don't you think a lot of the tensions in the Middle East are based upon weak oil prices, and what's it going to do to Russia? And I usually don't ask, but do you have any belief in...
I've never used geopolitics to try and trade from, because I've found way to the poorhouse generally.
Interesting, okay.
Because everybody always has a view, and they say, my friend in Saudi Arabia thinks this, and he spoke to a prince or whatever, and most of it's absolute nonsense. So I tend to avoid it. But I do know...
like the Saudis depegging from the dollar and stuff like that.
Exactly.
I hear you.
What I do know is if the price of oil is weak, things tend to get more volatile around the world. So, you know, for traders, that's a good thing. There's opportunities when things get more volatile.
Well, it looks like that would be a third drive under there anyway. We had one, we had two, you know, that my one trick, Raul, is looking for 3 drive patterns, and that's what it looks like. We had one in 15, we had one here. Looks incomplete to me. Maybe you're going to be right on this one. So anyway, I'll be able to drive from San Diego to Florida because gas will be cheap, and we'll have lunch.
Exactly. Perfect.
You know, Raul, I want to thank you so much. You know, I know you don't do a lot of interviews. I know you're more into the other side of the microphone now, but I've appreciated every time we've had a chance to talk together, and I wish you and Real Vision all the success in the world. Congratulations on edifying the public so that, you're right, they have an alternative to booyah. I'm Jim Cramer. Okay?
Exactly right. Brilliant, Dale. Thank you so much for your time. Great to speak to you as ever.
Thank you. Everyone, Raul Paul, he gave you he looked in his crystal ball, and he's pretty good, so pay attention to it, and now you know where you could find him. I want to thank Blake and Steve. I want to, for their looks today and their reviews. Good luck, everybody. What's a guppy doing? You know, I'm an old guy, so I look at, like, you know, one trade at a time. Let's see, 702. That's the monthly. Let's see what the hourly looks like. Yeah, it's got a chance, guys. All right, well, I'll see everyone tomorrow. And enjoy the rest of your summer day. And most of all, don't just count your pips, count your blessings. And I'll see everyone tomorrow. Good hunting.